Hi everyone, this is Malak Al-Husseini from Easy Markets, and we're going to talk about the big changes that are shaking up global markets as Donald Trump returns to the White House, securing a decisive win over Kamala Harris. His comeback as the 47th US president has already sparked significant reactions. If he follows through with his campaign promises, we might see tax cuts, stricter tariffs on imports, and some large-scale policy shifts in the economy. The market has responded quickly. All three major US indices, S&P 500, Dow Jones, and Nasdaq, soared to new records as investors anticipate pro-business policies like lower corporate taxes and fewer regulations. Bank stocks have surged, while legacy automakers like General Motors and Ford got a boost thanks to Trump's pledge to relax emission standards. Electric vehicle companies are feeling the impact too, although Tesla saw a nearly 15% surge as Elon Musk's support of Trump appears to have reassured investors. Now let's talk a little bit about Bitcoin, which shot up nearly 10% overnight, reaching new highs. Trump's pro-crypto stance has many speculating on more crypto-friendly policies in the future. But the ripple effects are not just limited to the US. In Europe, Trump's potential trade tariffs pose new challenges, especially for Germany. The German economy, which narrowly escaped a recession last quarter, faces increasing pressure. Trump's tariffs could cut into German exports, which have been crucial for its economic stability. German Chancellor Olaf Scholz is already dealing with internal political turmoil after dismissing Finance Minister Christian Lindner, which has thrown Germany's coalition government into crisis. Scholz has called for a vote of confidence in January, with the risk of early elections looming. In response, German Chancellor Olaf Scholz and French President Emmanuel Macron held a phone call this morning to discuss how Europe should respond to Trump's return to power. Macron tweeted that they've committed to a more united, stronger, and sovereign Europe to defend their interests and values in this new context. Europe may have to strengthen internal ties and prepare for tougher trade negotiations with the US. Central banks are also taking center stage. This Thursday, the Federal Reserve and the Bank of England are both expected to cut interest rates, continuing efforts to support economic growth amid these uncertainties. The US Federal Reserve is anticipated to reduce rates by a quarter point following a half-point cut in September. Similarly, the Bank of England is expected to announce its second rate cut this year. In the midst of these developments, keep an eye on market reactions as volatility is expected to stay high while investors adjust to this new phase in US politics and global economic shifts. Stay tuned for more updates, and let's see how these changes play out in the coming days and weeks. Thanks for watching. See you next time.